Hello and welcome to Traders Corner. My name is Samay Zake. Joining me as usual for Traders Corner is the founder and editor of Traders Corner, that is Garth McKenzie. Garth, thank you so much for joining us this week. So we're going to start off by taking a look at the S&P 500.
Yeah, that's right, Samay. We are going to take a look at it. We start with this chart every week on the show just to lay the background in terms of where the US markets are positioned, because it is a big driver of global markets, generally speaking. So if we have a look at it, last week and in a number of weeks before this, I've been highlighting this significant resistance area at 2400 on the S&P 500. Last week when we were here recording, I said that the market had had a sharp leg to the downside, but that it had begun to recover very, very quickly. And the fact that it had seen such a sharp recovery indicated to me that the buyers were still very much active at the lower levels, and that they were likely to then push it out through the top of that 2400 resistance area. And you can see that's exactly what has happened in the last week now. We've got that circled area that I've identified there, indicating that the S&P 500 has now broken to new all-time highs above 2400 resistance. And that is relatively bullish for that market and does point to potential for further gains. One would think now that the 2400 area that was previously such a stiff resistance will probably now act as support on any pullback.
Yeah. Well, if we shift our attention now to the top 40 future, you reckon it might be running out of steam?
Yeah, I think so. I'm going to look at a weekly chart as well as a daily chart of the top 40 to illustrate what I'm seeing here. So this one is actually the daily chart, and this is the top 40 future that I'm actually looking at here. Typically we look at the top 40 spot index, but I'm actually looking at the future here because there's some interesting things that are happening in terms of this futures contract, both here on the daily chart as well as on the weekly chart. And I like to look at it as a futures instrument rather than the spot index sometimes, because this is actually a tradable instrument that illustrates the activity between buyers and sellers in the futures market. So here's the daily chart of the top 40 future. We've had this upward channel in place since the early part of March, really, and you can see how nicely the trading action tends to have tracked inside that trading channel over the last 3 months or so. What to me looks like it could be beginning to form here is the possibility of a head and shoulders pattern. Now it might be a little bit preemptive of me to say this, because obviously we still need to go and form the right shoulder of that pattern, and then if we see a breakdown below 47,500, then I think that there's a potential that then marks the start of a deeper pullback. What does get me interested and why I suspect we could be in the early stages of forming the right shoulder of a head and shoulders pattern here is that the gains and the pullbacks have been slowly but surely shrinking in size. So where we had previously had sharp moves up and followed by pullbacks and then a rally from a higher level, here it kind of looks almost as if the pullbacks are becoming deeper in a sense, and the rallies are not as strong as what they had been previously during this upward channel. So that to me says just be a little bit cautious. I do think there's a potential that we make the right shoulder of a head and shoulders top here, and that might then begin to point to some further downside for that market. If we then take it and look at the weekly chart of the top 40 future, this is where it also gets interesting for me. You'll notice that last week the market pushed up into this area of about 48,500 on the weekly top 40 futures graph. And what we had last week was a bearish engulfing candle. Now what that implies is that at the start of the week, the market opened firmer. It traded a bit firmer at some stage, but by the end of the week, the sellers had taken the upper hand and they had pushed the buyers lower to such an extent that the body of that candle engulfed the body of the prior week's candle. And that is a significant victory for the sellers, or the bears, if you will. And to see a bearish engulfing candle like that at a significant resistance level, at a point where the market has had quite a strong run over a number of weeks, and also at a time where we've got negative divergence down there on the relative strength index. That negative divergence implies that the upward momentum is beginning to slow, and it does usually precede a pullback. So if we consider all of that, and now the fact that we've got a bearish engulfing candle, which indicated last week was a weekly reversal, that is quite substantial, and to me it suggests that we might well have seen a near-term top in our market for now, and that we could very likely see a pullback in the next couple of weeks and maybe even the next couple of months.
So you say we might have reached the top of our market for now. Where are we at so far this year in terms of the gains that have been made?
Well, if you have a look here, this is a chart that a diagram that I showed last week, and again I must credit David Shapiro for this because I stole it off his Twitter feed, but I found it very, very interesting and I figured it's worth repeating here. This shows some of the largest cap stocks in the top 40 index and what their contributions have been towards the index this year. So we're looking at about a 9% gain in the top 40 for the year to date. And then you've got each of the stocks and what their contribution towards that 9% gain has been. And notice right at the top of the list here, you've got Naspers really sticking out with a 6.28% gain for the year in terms of its contribution, I'm saying. I mean, Naspers itself is up about 35% for the year to date, but that equates to about a 6% gain for the top 40 index. So that's huge. And then if you look, the other ones that have contributed a little bit, Richemont is up around 2% in terms of its contribution for the top 40. But for the rest, it's really been nowhere. I mean, there's small gains, small losses, nothing much to really write home about. It's really all been about Naspers this year. And that has been the biggest driver of gains on our top 40 index for the year to date.
So if it's the biggest driver of gains year to date on our index, what does its individual chart say? Well,
it's a good question. And here we have the chart of Naspers, the daily chart looking back over the last 2.5 years or so. And what is very clearly evident here is that this stock has been trading in a nice, neat upward channel since early 2015. And you can see that with the big rally that we've had over the last 2 or 3 months, the stock is now running up into resistance towards the upper end of that channel. And my sense is that it's getting very stretched. There is a little bit of negative divergence on the stochastic at the top there, which indicates that this rally probably is running out of steam. And when I look at that, I just think, we've had a rally of about 800 Rand per share in a straight line since early March here. And that is not sustainable. The trajectory of that gain is not sustainable. And it's likely that this share will go into some sort of a consolidation phase very soon. And I won't be at all surprised if we see a 10 or 15% pullback here at some stage in the next couple of months, because it just, although it's bullish, the analysts have all got very high targets for the share and so on. That's always the case for Naspers. It doesn't mean it just goes up in a straight line. It does pull back, and you can see in the last 2 years there have been numerous times where the share price has pulled back as much as 20% on some occasions. So I won't be at all surprised if that does happen again for Naspers. And obviously if that does happen, then that has a significant bearing on our top 40 index.
Yeah.
And if we take it back to the weekly chart of the top 40 index there, where I highlighted that bearish engulfing candle, I think that to me is starting to say, just be careful. I think that this rally that we've seen in Naspers and consequently in the top 40 is probably very mature for now, and the likelihood of a pullback is starting to become quite a good likelihood.
Yeah. All right. So that all leads us then to what our trade for this week is going to be. You want to take us through it?
Yes, that's right. So it's a put spread option structure on the top 40 index, and it goes back to everything I've spoken about in terms of the technical structure of the top 40 index itself and the weekly reversal that we've had, and then obviously taking into consideration that Naspers chart, because that is such a significant contributor to what this top 40 index does. My feeling is that we probably are lined up for a pullback during the third quarter now, and that we're probably going to see some sort of retracement in this market and in the share price of Naspers. And I want to take advantage of that if that is the case. To do that, I've created a put spread option structure, which I'll go through the details of it now. This structure goes out to September, so that the expiry is the 21st of September this year. So it gives us about 3.5 months of runway from here, effectively, to participate in any weakness. And I'm looking for the market to pull back below 48,000 and take advantage of any weakness below 48,000. So what I do as a first leg in order to take advantage of that is I've gone along and I've bought one contract of a put option for the September ALSI at a strike of 48,000. So what that means, and you can see the payoff of this put option over here, any movement below 48,000 on the index, and by the way, these numbers along the bottom axis here are the different levels of the top 40 index with 1,000 point intervals indicated there. Below 48,000, this option structure will begin to make money. Above 48,000, I pay my option premium, and I've paid 12,079 Rand for that option. And that's a lot of money to pay away for a put option that's going to give us participation for profits below 48,000, but it gives us profit participation all the way down to zero. Now the market's not going to go to zero. Nobody's that bearish. So what I can do in an effort to try and mitigate some of that cost, the 12,000 Rand that it's cost me, is I can sell away some of that downside participation where I don't feel I'm going to need to be involved. So what I've done then is I've gone short another 2 legs of 2 additional put options at lower strike levels. So I've sold one put with a strike of 46,000. I've sold that short at a price of 6,452 Rand. What that implies is that I'm actually paid. I'm receiving the premium of 6,400 Rand in order to sell this option short. And you can see the payoff profile indicated by this green line over here. Above 46,000, I effectively get to receive, I earn that 6,400 Rand premium. And then below 46,000, that leg of the structure will begin to lose money. But by that stage, remember, I'm already making quite good money out of my 48,000 strike put, which I'm long of. In addition to this, I've then sold another out-the-money put structure with a strike of 44,000, and for that I receive a premium of 3,313 Rand. And again, that then starts to lose me money below 44,000, but above 44,000, I keep that premium. So it looks a little bit complex. If I tidy it up a little bit and overlay all those 3 legs of the structure against one another to kind of get a total payoff, that thick black line is what it will look like. And if I tidy it up a little bit further, what it really means is that above 48,000, I've effectively paid away a premium of 2,314 Rand. I lose that. I've given it away. I'm willing to pay away that premium. Anything above 48,000, I can't lose more than that. The maximum I can lose is my premium, and that's gone, and I'm willing to accept that it's gone. But below 48,000, I then start to make money. Down to 46,000, and between 44,000 and 46,000 on the top 40 index, I can make close to 18,000 Rand profit out of this structure over here. Below 44,000, the profit begins to erode, but I only start to then lose money on the entire structure below 42,200. So I've got a very nice broad payoff area over here, effectively between 42,000 and 48,000, but my real sweet spot is between 44,000 and 46,000. And that equates to about a 5% to sort of 7 or 8% pullback on the top 40 index from where it has been recently, which I think is fairly feasible as we approach September futures closeout. So to look at it another way and to overlay it onto the chart, here we have our top 40 futures graph on the left-hand side, which we've looked at already previously on the show. And here you have the payoff profile of this option structure overlaid against the chart. So there you can see below 48,000, any pullback in this market below 48,000, I then start to participate and I'll start to make profits. Between 46,000 and 44,000, I make my maximum profit of close to 18,000 Rand. And that's quite honestly where I think this market is going. So I'm positioned for that. The nice thing is it's effectively, it's a short position, but I'm not naked short, because if the market continues to go up and up and up, well then I know the maximum that I can lose is my 2,300 Rand premium that I've given away and paid away. But the risk to reward ratio of this trade is good. It's almost 8 to 1. Yeah. My potential reward is almost 8 times bigger than what I'm paying as an option premium here. So to me, this structure looks good. I do think it's a nice position to be in as we go into the third quarter, and given the backdrop that I've painted in terms of NASPIS and the overall market looking as if it is poised to pull back in the months to come.
All right, so then let's very quickly look at how our 2 portfolios are then doing.
So here's the South African portfolio in Rands. I've accounted for this 2,300 Rand option premium. So we're up 2.4% for the year to date. They're not great. It's been a difficult start to the year, but I'm quite comfortable with this option structure as we go into the third quarter now. And then if we look at our offshore portfolio, we took a long position in Capita Group last week, where we went long of 430 CFDs at £5.85. We're still in that trade. It's working for us. We were the stock went ex-dividend during the week of a 20 pence dividend, so we actually received a dividend there. So if you include the dividend and the weakness in the share price, we're actually only down £6 on that position at the moment. So down 3.81% for the year to date on our pound portfolio. Again, not great, but not the end of the world. We've still got half the year left in order to try and make good on this.
All right. Still half of the year. Let's very quickly look at any upcoming courses and where subscribers can reach you. Yeah,
so my colleague Andrew Todd is running a top 40 trading course this Saturday, the 3rd of June. If anyone would like to attend that, please pop me an email, garth@traderscorner.co.za, and I'll send an email with all the details. And then lastly, if viewers would like to subscribe to our free weekly email, they can do so. Go to traderscorner.co.za and go and look in the middle of the page. You'll see a link there for a free weekly email. Click on that, you can register. It's very quick and simple, and we'll send you an email every Tuesday detailing what is coming up on the show for that week.
All right, good place to leave it. Thank you so much. That is Traders Corner for this week. Till next time, goodbye.